I'm Corbett Wall with DV Auction, here with a 3-minute cattle market update for Friday, July the 22nd, where the industry continues to be focused on the basis. And as they do that, this cash market just keeps dwindling away. And they've been doing that for the last several months. Your live cattle futures on the August contract still, Wednesday was down 97, Thursday down $1.90. To end the day on Thursday at 107.52. Feeder cattle on Wednesday, August contract was down $1.27. Thursday down $4.22. Back to that real volatile stuff with feeder cattle August contract ending the day on Thursday at 134.40. All down. A lot of these contracts are at lifetime lows now, and we're really up against it. And it just, we're bound to get into a basis flip-flop here. We're getting into the fall of the year where normally August ought to be straightening out, but it may not. But for sure October and December. But your live cattle contracts are not going to keep trading at such a big negative basis to what cash is. And the industry has been enjoying that, having that extra basis, those that are hedged, to put in their pocket to try to get somewhere close to a break even though it's not stretching near far enough. But as they've done that, they just continue to lose market position, and we've lost a bunch more this week. We have had some fat cattle trade through Thursday afternoon, and it's going to be 114 to 115 on a live basis. That's $2 to $3 lower, and we've had over 57,000 head already sell, so it's sure not going to change on Friday. Your dress trade at 183, that's $2 to $5 lower than last week. But as we look back at trying to hold this huge basis, $7, $8, even at $10 or more basis there several weeks in the last few months, there was a lot of missed opportunities there to try to hold the cash market, but instead guys were just happy with the basis, so they were okay to let the cash market fall, and they were almost rooting for the board to trade lower so they'd have a little bit bigger basis to put in their pocket, and just sat idly by and did that when they should have been kind of digging in with these packers killing around 600,000 head every week and maintaining that week after week and staying in the black even through the hard times of the year. They should have been paying attention to that, not contracting so many cattle, not promising so many cattle, digging in their heels, and being in a current situation, trying to take advantage of that a little bit. But absolutely did not do that at all. Your cash fat cattle are the lowest they've been in 4 years. One of the meetings I went to last week in Denver was a CME working group, a committee looking at the problems with the live cattle contract for the most part, and trying to hedge risk, and just a lot more questions than there were answers. The volatility problem is still there, although it kind of went away after the main NCBA meeting there when they kind of threatened to look at it. And I don't think this summer meeting was big enough threat to stop the volatility, because it hasn't slowed down this time. But still a lot of problems, people worrying about high frequency trade, how much of blame is to that. But the big problem is a lot of people are not thinking the board is a good enough indication of what the market's going to do to handle their risk. And so instead of hedging their cattle, they're just contracting the cattle, which adds even more cattle to captive supply, which waters down our negotiated trade even more, and absolutely no leverage to try to hold the market together at all. You look at your cash feeder cattle, El Reno, Oklahoma on Wednesday at 5,700 head. Still steady to firm, as guys are still wanting to get some of these good cattle coming off grass, these green yearlings, to put on feed before the calves get here. But El Reno didn't see the big hit that come in on Thursday, because if you look at Cattle Market Central's report there at Salina, Kansas, Farmers and Ranchers Livestock, $7 to $10 lower on big feeding cattle, with the full decline on those 8-weight steers that are so popular in that part of the country this time of year. And it's the guys that sold last Thursday were really, really lucky. They hit a pop there, and if they should have, if they didn't, it's really too bad. But there was a day there when you really could have sold your yearling steers off the Flint Hills grass there really well. Look at another Cattle Market Central individual quote there out of El Reno on Wednesday. Out of all Cattle Market Central load lot yearling steers, this was the highest one. A load of steers in El Reno on Wednesday just after lunch there weighed 858 at 139 1/4. And that's 3 minutes, and we'll talk to you next week.